Okay, fine. We are live. Good morning, everyone. Welcome to another episode of the Crypto Hour. Today, Friday, the 7th of August. Um, August generally is like we are live. Sorry, good morning, everyone. Welcome to another episode of the Crypto Hour. Today, Friday, the 7th of August. Just a second. Okay. Okay, so August is generally a quiet month, both in the stock market and also in the crypto market. So there isn't very much really in terms of like new news relating to crypto itself, but there are some ongoing themes that are carrying on in the wide macroeconomic agenda that we need to keep in mind, and a couple of crypto-related issues as well that we're going to explore today. So let's start beginning. The two main drivers at the moment. Let me start my screen so I can show you. So the two main drivers at the moment of economic activity, basically the labor market, and which is closely connected also to interest rates. So the two things that are controlling then the risk markets. So U.S. labor and rate increase or decrease expectations, and also the geopolitical risk and the energy risk connected to the Strait of Hormuz and the ongoing Iran-US war. Now, why do they matter? Because of the usual push and pull of the mandate of the Fed, which is keeping the labor market healthy, and at the same time control inflation. So the Strait of Hormuz has a direct impact on inflation because obviously oil price being higher obviously puts pressure on a lot of goods that are produced through oil, which goes into pretty much everything, if not directly in plastics, for example, indirectly through the production of energy. So that is causing an upward push on inflation. Okay, but at the same time, the labor market is showing some weakness. This week, for example, we can see here on Wednesday, we have the ADP non-farm employment change, which is something that precedes. So this is like a private survey that precedes by a couple of days what's going on today, which is the non-farm employment change, which is we might know as like NFP, non-farm payrolls. But this number is seen as an indicator of what today's announcement may be like, and it's shown quite a lot of weakness. So it was like 95,000 jobs added like last month, and then this month is only 44,000. Expectation of 68, so like almost like a third less than expected. So weakness in the job market takes pressure away from increasing interest rate. So when I think because in a way to stimulate the economy, you can't increase interest rates that push pressure on employers, and so it doesn't make them want to employ new people. So on one side we got inflation, so an increasing amount of the Monetary Policy Committee are wanting to increase interest rates. On the other side, we've got a weak labor market that that needs to be supported. So it's in this view, it's very important the announcement of today, just before the opening on the stock market, an hour before, of the non-farm employment change, because that will have a big impact on expectation about interest rates. Okay, so if the number is lower than expected, so lower than this 85,000, that's this market forecast, it will be seen as almost like a positive signal. Although the labor market is weak, by the markets in general, will be seen as a positive signal because it lowers expectation of increasing interest rates. Okay, if the number was instead healthy, it means that there will be no need of the Fed to support the job market, and so there will be more risk of an increase in interest rate, and so the market will take that probably. I'll say, okay, we don't have a crystal ball, but probably in a negative way, because it means it puts more pressure on the decision to increase interest rates rather than keep it as it is. So how did the market take? For example, we can see how did the market. So I'm showing you exactly what the reaction is and what the market sentiment is about a weak labor market. So, oh, apologies. So it's interesting to see. Sorry, let me just go this. How was gold taken, for example? Okay, and you know the gold is very connected to interest rates. So what happened on Wednesday? Boom, 4% increase on one day. At the moment, we are sitting on about 5.5%, almost. From the low, it's 5.6%. From the opening on Wednesday, it's 5.2% in just 2 days. After it has been in the doldrum really for a month and a half, really from beginning of June, actually. So for 2 months, it hasn't really done anything, and then all of a sudden, both gold and silver have had a marked increase. Silver even more, like 7.5% in 2 days. Okay, so that's the thing. If you go and have a look instead at the S&P 500 and the Nasdaq, so let's see at the so this is the ETF that covers the S&P 500. So this is we don't have the things today. So at the moment it's pretty much neutral. So this is where we started on Wednesday. This is where we are now. So we're just like literally pretty much where we were on Wednesday, just minus 0.1%. And the Nasdaq actually he had started the week very well. But it's at the moment pretty much again where we started on Wednesday. But the pre-market, it's slightly over 719. So if we go to the pre-market, then it's slightly positive. What about the S&P 500 as well? So expectations are positive in general for the market as well. Although at the moment they are slightly negative. Okay, so at the moment, stock market is pretty much indifferent to this. It carries on for its own rhythm. But we are at the moment we have a positive week at this stage. Okay, started 688, we now on 714. So we have. Oops, sorry, the other way around. So at the moment we're looking at about 3.8% increase this week in the Nasdaq, and you can see we're not far away from an all-time high. So we only a few percentage points away from an all-time high, and the same from the S&P 500 actually has created a new all-time high this week. So sentiment is pretty positive at the moment in the stock market, 2.5% up this week. So if we go and have a look, then what happened to Bitcoin and the crypto world, and just let's go into the dynamics of the all the major crypto projects like Bitcoin. Let's look principally at Bitcoin and Ethereum. So I can see at the moment is a green week, although it's very, very very weak from 63.5 to 64.5. I mean, it's nothing really to speak home about, but so Bitcoin continues to be range bound. Let's go a little bit more detail. As usual, the zoom controls are always in the way. Okay, so you can see we're still in the same range that we've been in from really beginning of June. Okay, since this drop, we've gone up a little, we come down and retested that low, and then we've been really within this range ever since the 5th of June. So do you remember what I told you last time and the last few weeks? So until there is a breakout out of that area, we're still just merrily going along. And in a way, we know that what we are expecting, what the whole crypto market that follows the 4-year cycle is expecting, is kind of October, November. Okay, October, November, which is when traditionally the new upcycle started. So we can see here the previous two cycles. 2018, it started beginning of December 2018, and it grew pretty much straight for 3 years. In 2022 also, yeah, the low was in mid-November, 20th of November, so a couple of weeks before. And again, from 2022 to November 2025, October 2025. So pretty much like 3 years of continuous growth for both these periods. And I say 2000% the first time, 700% the second time. So if we're expecting the same thing to happen, so we don't know where the starting point is going to be, but I expect it to be somewhere around this area. Okay, so we might already have hit the low for the period, or we might have another test in the mid to low 50s. But from here on, then we're expecting to see from October, November to have a similar starting to grow as we did in the previous two cycles, and carrying on then from for the next 2.5, 3 years, all the way into 2029. So obviously, as you can see, there's been quite a reduction of the pace of the increase from last time. So if we grew by about 700% last time, so maybe this time we could maybe expect about half of that growth will be a reasonable expectation. So if we have already hit the low, that will, sorry, let me just go. I need to make more room in the chart. Again, more room in the chart. So 350% will take us to the mid 200,000, so about 260,000 roughly. Okay, and that would be equivalent to about 350% growth from the low. If what we hit at the moment it's the low 57.5, we don't know that yet, but if that is the case, we could expect within 2 to 3 years time to hit about 250. Okay, and we might go above that, we might stay a little bit below, but it's ballpark figure. This is what we are this is what we are looking at. And again, to use that for Ethereum, we use the same comparison. How did Ethereum do in the previous two cycles? Okay, so we can try and see the same, but it's the scale is slightly different because all coins have had much bigger increases. So you can see it was 2000% for Bitcoin. In 2018 was almost 6,000% for Ethereum. And the last cycle, oops, come on, it was about just short of 500%. Okay, so you can see that actually during the 2022 to 2025, actually Bitcoin dominated, even grew more than Ethereum, that can be used as a proxy for the smart contract networks. So for most of the other altcoins, apart from Bitcoin and the proof of work coins. So again, where could we see this going? Where could we see it going? It went really from just short of 1,000 to 4,000 in the last cycle. At the moment, the lowest point that it hit during this cycle is 1,300. But really, so this is since it made a new high, the lowest point is this one here. Oh, come on. Okay. Which was, as you can say, about 1,500. So again, I would say around a 400% increase will take us in the region of about 7,500. So you can see we're talking about, even if you take it down to what Bitcoin has done, 350, it's still just short of 7,000. So you can see even in the major projects, the expectation now over the next 2.5, 3 years, it's very favorable to generally speaking, a new technology that's starting to be used more. It's maturing, and we see. So we'll be talking in a second about what's going on as well in the kind of market structure discussions in the US, and in particular with the Clarity Act that's going on. But still, let's have another look as well at the smaller crypto market, those smaller altcoin markets represented by these others, which is again the total market cap of the whole crypto market. Let's remove all the drawings. Total market cap excluding the top 10 coins. Okay. So by the way, this blue line, when you put it on the weekly chart, 200, sorry, this is wrong. 200 should be 208. So this is the average of the last 4 years, okay, which is like a Bitcoin, the Bitcoin cycle works in 4 year increments. So this is the average of the last 4 years, okay. If we start looking here, how did the altcoin? So this is a similar move like in Ethereum, but even more pronounced. So that was like an 8,500 increase in 2018. 550%. Like we can see, during this current cycle that peaked for the altcoins in December 2024, we didn't even manage to do a new high. So it wasn't a particularly impressive move. But there is a lot more going on in altcoins now that of actually use cases that were not there 4 years ago. So I would expect this to be the breakout. I would say at least 400%, if not more, from this low. So let's do it without exaggerating. Okay, so 400%. So that again, with about 750 billion, and at the moment the current level is 160. Okay, so again, similar to Ethereum, like a fivefold increase over the next 2.5 to 3 years. I mean, I would say it's not concentrating on any single individual project. I'm just talking about the average. And there are now products that you can buy that are combination of crypto projects that you can invest from with a single click. So it's not difficult to create a portfolio like this. So an increase of, let's say, 400% over 3 years, it wouldn't be a bad return. And this is even so it would be like less pronounced than we had even in 2023, which wasn't that impressive anyway. But we are expecting now to create a new high during this cycle, so higher than in July in November 2021. And that as a minimum target is about 500 billion, so about 3 times as much as today. Okay, now let's go and talk about the so I'll say from the point of view of immediate price action, we got labor dynamics and oil dynamics. Okay, so keep an eye on what happens between Iran and the US and what happens to the Strait of Hormuz in particular, because that could affect not just the market in general, but things like food production, for example. So it's not just oil, but things like fertilizers. They are like a byproduct as well. So in many places in Europe and other parts of the world, we are at the point where we are almost like running out of fertilizer. So that then would put pressure on food prices, for example, because there will be less crops, and so the food prices will go up, inflation goes up again, and then what happens? The government is forced to increase interest rates, and then put even more pressure on the economy that's already showing signs of weakness. So from the point of view of the and let me just stop sharing for a moment. From the point of view of the Clarity Act, it looks like we can't, nothing is going to happen in August. So vote is at the earliest point will happen in September. So you can see now so whether it happen in September, October, everything is converging into that 4-year cycle turning point, which is end of October, beginning of November, as it happened in the past. So it's not just what people expect. I think, well, I'm gonna buy Bitcoin because historically over that period it started growing again. But there are other reasons outside of that. So one, risk, in general, risk connected to uncertainty about oil, and the other one is the Clarity Act. So if we could get all three pushing forward at the same time, so coming to a period when people are expecting prices to grow, the vote about the Clarity Act that brings then institutional investors in, and at the same time, a resolution of the problems about the Strait of Hormuz that makes people more willing to take risks, put it that way, in a simple way, then we could have three drivers that are pointing towards the same direction in creating an upward pressure. And this is not just for crypto, but for all risk assets, so including the stock market. Although there are people that expect a drop, at any time, probably not straight away. Probably not straight away. There is some headroom still before we actually drop and we see a reversal. So what are the main points? One is there's a split between the SEC and CFTC. So the SEC, we know, is the Security Commission. The CFTC is the Commodity and Futures Trading Commission. Okay, so now it looks like the Clarity Act grants the CFTC exclusive oversight over the spot market for what it describes as digital commodities. So digital commodities will be then decentralized assets that can demonstrate a high degree of decentralization. So we're talking about Bitcoin, talking about Ethereum, Cardano, other coins that can show that they are highly decentralized. He also established a pathway for much mature blockchains to move from SEC oversight to CFTC oversight, and to stop what went on, what we've seen over the last 5 years, which was almost like a regulation by without legislation, just by decision of the SEC. They didn't have the power to actually create new legislation about crypto, and this is why the Clarity Act is needed to bring clarity into that field. So also there will be a lot more precise intermediary registration and oversight. So all exchanges, like we've had problems like Celsius and other exchanges that have failed over over the past few years. And what happened when they failed is that um, investors' funds are compromised. And so investors saw a return on only a small portion of the funds that they had invested. Now there's going to be a requirement for centralized exchanges, brokers, and dealers that operate in this field to actually register with the CFTC and also have a segregation of customer funds from company funds, so that if anything happens to the company, that doesn't also involve depositors' funds, because they're going to have I'm not saying not the same as a deposit in a bank, but it will have a similar sort of segregation and understanding, and those are not funds that a eventual creditor can use to get his debt paid, because they don't belong to the exchange, they belong to investors. So that is something that you can see how legislation, can be seen as a bad thing, but can be seen also as a really good thing, because that it puts clarity and thinking, and it's trust as well, that people thinking, okay, if I deposit things in Binance, in Coinbase, in Kraken, and something happens to the company, I'm not going to lose all my coins. Okay, so that is very, very important. And also, it will remove what the SEC was trying to do for DeFi. It was trying to get things that are almost like impossible in DeFi, like to get any users registered, and was classifying a DeFi protocol simply like a liquidity pool at the same level as a broker dealer. So it was removing that necessity to register in that way, and is classifying like open source software like Uniswap and PancakeSwap and all these as like exempt from registration requirements. And also we'll have an exemption for registration for small projects below 75 million. That helps new projects to launch, and only they will need to register once they go beyond that threshold of 75 million. That means that it allows innovation, new projects without too much red tape at the time when they launch, and then obviously they get to a point where they get to a certain size and they will need to then register. So what would happen? What would be the impact of the Clarity Act? And this is the most important thing. So the main thing would be institutional capital unlock. Okay, because now once there are clear legal parameters, gives then financial institution, asset managers, corporate treasuries, the certainty required from a regulatory point of view to offer then crypto custody, staking services, tokenized products, and all that. So it's the unlock of capital is going to be of a massive scale once this is why everybody's looking at the Clarity Act and waiting, to see exactly, to read the small print before they launch any product, a crypto-related product, and make sure it's not just companies like Coinbase that are going to launch this product. It's going to be like any bank, because they are directly competing with these projects. And if people are using this project because they want access to this type of assets, then banks will also start offering them, because they can't lose customers to very easily to online platform like Coinbase. They got also a much lower cost base. So they will start offering to their customer the same as we've seen, companies like Morgan Stanley, Goldman Sachs, BlackRock launching crypto products. That they at the moment is where they make a lot of money, because it's a new product that people are interested in, and they are kind of this first mover advantage is really big. And also, um, this move between the SEC and the CFTC will stop this regulatory arbitrage in a way. So it creates a standardized rule book for US market participants. Okay, so if you want to launch a new product, you don't need to go and launch it in Bahrain or any other country. You can launch it straight from the United States. because you're not having that enforcement actions by the SEC that was trying to regulate through enforcement for established tokens. So obviously there are 60 votes are required to pass this legislation. So there are lots of discussions now had and trying to achieve compromise between different lobbies that are pushing in different directions. But the moment that this is approved, would have a big influence on the crypto market. On different things, we've seen technology from the technology and security point of view. Sui Network has launched a post-quantum signature scheme, to create basically the first step in creating quantum safe accounts. There's been a lot of discussion about what happens when quantum computing is launched, and there is obviously is going to have the power to break into certain type of wallets. So so there is a lot of work that's going on behind the scenes to create blockchains that are completely quantum resistant. And I know that we heard from Jonathan in the past, as Cardano is already very far ahead into that, into this process. And everybody is working hard to get there kind of sooner rather than later, because at some stage they're all going to be confronted with this new computing power that blockchain needs to deal with. So let's have a look. The other thing, let me just check on my notes. So the other thing that we might want to look at, let's have a look at the flows then of the ETFs over the past few days, and see what the on-chain matrix also may be saying to us. So let's have a look first on the. As you can see, although price hasn't moved very much, we can see that this week is at 4 positive days. So funds are flowing back into the Bitcoin. Institutional money is starting to flow back into Bitcoin. So 2, 4, 6, about 700 million have come back into the fold of Bitcoin ETFs. Let's have a look at the Ethereum ones as well. USD. So obviously Ethereum being a little bit smaller in size, the ETFs, but still 90, 150, 200, about 190 million have come up into Ethereum. So you can see that there is now interest creeping back into the crypto market. Let's have a very quick look at the Solana and XRP as well. So nothing with Solana, nothing is happening in Solana. I don't know what's happened there, but really no movement whatsoever. And XRP as well, very little movement. That is pretty much steady. So all the movement at the moment is concentrating on Bitcoin and Ethereum. The other ones are pretty much standing steady, maybe a little bit of inflow, but nothing really to write home about. We can see here now the crypto ETF net inflow, and we can see in a graphic way, you can see 1, 2, 3, 4 positive days now. So there's like a whole week of positive intake, and we can see like the trend is starting to stabilize. And we hit a top in October of 2025, and then it kind of dropped by a little bit, and now it's starting to slowly inch back up again. Okay, so positive news from the ETF market overview. Let's go and have a look at the. Let's have a look at the balance on exchange. So let's go the last. So and this is like just confirming what we saw. So this is the total either inflow or outflow from exchanges. Okay, so when there is money that goes out of exchanges, it means people are retrieving funds to store in cold storage wallets. Okay, and where there's money like this, like the week before, for example, money that comes into exchanges, it means that they are putting on exchanges because they want to sell. Okay, so again, this is confirming when we saw like money coming back into ETFs and money leaving exchanges, leaving exchanges. Let's have a look if we can find the reserve. Uh, okay, so we can see that we are now the exchange reserve, which is the blue line. The black line is the price, Bitcoin price, and the blue line is the Bitcoin reserve on exchanges. Now you can see now the lowest point we were since beginning of 2024. So again, low number of Bitcoin on exchanges means also like upward pressure coming into price because there are less coins to be exchanged. So the basically the offering, like the supply and demand, supply it's lower, much lower than it was here. You can see reserves of 332 billion, and now it's 250. So it's there's been like a drop of more than 20%, about 25% into reserves on exchanges. So these are funds that have left exchanges are back into private wallets. So it confirms the what we are seeing, kind of like that the market is at the moment settling, is happy to keep funds away from exchanges because they don't see any reason. So it's a positive sense, a positive accumulation signal that people are comfortable in keeping the funds in their wallet because they want to hold on to it in expectation of price growth. And going back to the realized price, where are we? Let's look at the past month or so. So we are now at, the realized price on Bitcoin is about 52.7, which has gone down slightly since we were up to about 53. So at one point we get up to as much as 56,000. Okay, so but it is generally so I keep looking at this. Say over the last few days has declined slightly as the price of Bitcoin is now there are lots of Bitcoins that were bought at a higher price that are exchanged at a lower price. And then if there are like new money that's been sitting at lower prices that is exchanged now at these levels. So there is like some upward pressure from old Bitcoin that's been stored for a long time, but also downward pressure from Bitcoins that were bought over the last year at higher prices than it is today. Okay, but this price, which is hovering around 53,000 at the moment, historically has been close to the bear market bottom. Okay, so at the moment, the lowest we have seen at this point was 50. I think on Binance we went down to 57.5, if I'm not wrong. And this is standing about 53,000. So we already been within a 10% range of this realized price, which is kind of the range that I'm looking at, 10% either above or below. So above would be, we might already have touched it. If it was below, it will take us to about 48, 47. But anything between, I would say, 58 and 48 would probably be where we find the cycle's bottom. Now, the discussion point is are we seeing, let's say we're going back to Bitcoin and kind of this small rally that we've had ever since the end of June. Now, are we seeing a bear market rally, or are we seeing kind of like just the beginning of a strong pullback and the origin of a new cycle high? As I said before, at the moment, what I see in the charts is not neither one nor the other. So it still needs to be decided where we're going to go. And the first indicator would be kind of breaking this range really that we've had since the beginning of June. So I'll say we have had a try of breaking on the upside, has failed so far. So Bitcoin got to about 67,000, but it didn't move higher and break this point. And at the moment, we haven't really tested the low of 57.5. We stayed above 60 since we had this push. And at the moment, we're standing about 64.5, short of 65. So if there is enough pressure in there to break this, then we might be looking at the really beginning of a new uptrend. Okay, now this move really the downtrend is technically this, but this move is so weak that at the moment I'm still looking really at this point as a strong indicator of a reversal. But it's still far away. It's about almost like $20,000 away in the price of Bitcoin. So yes, we're looking at this, but it's not a definitive answer that simply because we moved back to 68 or 69, it means that it's a new it's a new move for Bitcoin. But moving above 82 and a half, they definitely would, because there would be really no discussion. These are the big moves that we have seen. Okay, so this is the last control point that we've hit, and so I would say yes, if we break that, then we are definitely starting on another strong move. But at the moment, I would say the only thing I can say to you guys is that as we're inching closer to October, November, for me, kind of no news is kind of big news. In the past, before a move back towards like growing, we've had another correction of about 25%. So could it be that this was the correction? That was like 15%. Could be. Or it might be something that hasn't really materialized. Again, the moves about 20%, it will take us down to the mid, low 50s. So everything is still on the cards at the moment. Nothing has been ruled out. But there are several points that are starting to converge. Okay, so the oil, the Clarity Act, and also what we see, the on-chain activity that we are seeing, that is, trying very little green shoots that are pushing though in the same direction, both for Bitcoin and also for all coins. The last thing before I stop this and we go into other things, it's let's say Bitcoin. Let's have a look at Bitcoin dominance. So we're still again hovering around this, like the big drop points from 2021. Okay, this is not the drop in Bitcoin price, because Bitcoin was still growing while the Bitcoin dominance went down. Okay, but we are still hovering around that point of where in the past we had a big drop, in the sense that there was like a movement of funds. This is what this drop is indicating, leaving Bitcoin and going into altcoins. Okay, we haven't had that, I'll say, during the past cycle. This is the most we've seen which is not very far at all. So a 13%, where the previous, I've already got that. The previous time was like a 46% drop in the Bitcoin dominance. So if that was to happen again, it would take us down kind of pretty much to the low. So this is again Bitcoin dominance number. Okay, so it's not about price. It's just the relationship between Bitcoin and all coins. Okay, but so this move down indicated all coin season. You see that this was May 21, and the lowest point actually was in end of August. Then the top of the market was in November. Okay, was in November 2022. So this was down here actually. It wasn't the bottom of the Bitcoin dominance. Okay, but definitely that was the altcoin season when all coins were getting to silly prices. You know, things like Solana grew from like a fraction of a cent to $200, and those kind of silly increases where you saw all coins going up by 5, 6, 7, 10% daily for weeks on end. Okay, so that hasn't happened at all during this cycle, but it might start happening as the market turned around. See, last time we went from December 2020 to May 2021. So it only took about 5 months to see those thousands of percentage of increase in prices. It took 5 months. That's all it takes. So this is why it's important to watch this thing on a kind of a weekly basis, because when it goes, it really goes. And there's no way of pinpointing it now and saying exactly when that move will happen. We just have to watch it and take the early signs, like I was showing to you just a minute ago. You know, this is probably for Bitcoin would be the earliest indicator that something big may be starting to happen. Nothing at the moment, but as I said before, there are people that are already doing it. They are accumulating. So if you haven't already invested in crypto and you got funds that you want to do that, want to invest in, it wouldn't be a bad idea to start doing dollar cost averaging now, because although the prices might go down lower, but you'll be buying at an average during a period where historically Bitcoin prices are bottom. So even if you're not buying at the exact low, you might be buying at an average between now and maybe October, which is a really good price historically for Bitcoin and for other coins as well. So stop sharing now. Let's have a WeChat. Yeah, we'll do the last 10 minutes. Anybody wanted to ask anything or contribute something? Eric, go ahead.
He was talking to Jonathan recently, and then he said that Ledger has been compromised. Is that still the case, or did you hear about that?
Jonathan, I'll give you the mic actually, as I need to visit somewhere for a couple of minutes.
Hey, morning, Eric.
Good morning.
Ledger, I don't know if Ledger had a compromise, but there was a compromise in things related to hardware wallets. I remember we talked, but I can't remember what we were talking about exactly.
I was asking you then about retrieving Midnight to Ledger, and you said it wouldn't be a good idea at the moment, since you've heard on that morning, I think it was 2 weeks ago, something happening around Ledger.
Yeah, I can't remember exactly what it was with the Ledger wallet, but there was effectively been a stream of new attacks on cryptography and crypto hardware in particular. The larger major one that's come to light has been oh dear, I forget what it's called. It's a Bitcoin cold
Was it the
wallet.
Coldcard Q?
Say that again.
Coldcard Q, the air-gapped Coldcard Q.
Coldcard Q, something like that. Yeah.
Coldcard. Right. There was a few different ones, I think. And I am no guru in crypto. However, I also feel the ledger was that potentially they got everyone's details. I don't think they hacked into the actual wallet like they did with the cold cards.
Right. Yeah, that sounds familiar. So the cold card was actually a cold wallet. People had signed transactions maybe once, putting Bitcoin onto it. It had, full traditional seed phrase and all the rest of it. They'd had it sitting idle for many years, and still their funds were suddenly taken from them. And it's to do with weak application of cryptography and the rules around them, signing transactions on the blockchains where part of the private keys can be deciphered or not deciphered, but part of the transaction that was formed in the past can reveal private keys enough to the extent that you can recreate another transaction in a similar vein, using the same random particle, the nonce it's called, reusing that to actually form another valid transaction that was allowed you to steal funds. It's a particular vulnerability within some cryptographic use cases, and the SecondFi wallet hack on Cardano that was vulnerable to it. That was really just bad practice among developers. The cold card wallet was original firmware, as far as we can make out, vulnerability. So this is a sort of if you're good at maths, then you can create these products and do a good job of it. If you're not a mathematician and you create these products, then you can really come unstuck. And so these are instances where people have used other people's technology to construct things, cold wallets, hot wallets, and actually become vulnerable. So you do have to be really careful in which wallets you use, in how you use them, how often you use them, how much you hold on them. And it's at the moment it's leaning towards, so far there's no actual vulnerabilities in the big ones. So Ledger, Trezor. I actually use one called Keystone. Those are all safe and sound. There are vulnerabilities sort of creeping into the Ledger ecosystem in terms of you can now shard your seed phrase and have it stored by Ledger amongst various different stores. Their firmware is being regularly updated. Also, their firmware is not open source, so no actual mathematicians can go in, look at their source code, and check all the mechanics of their signatures and all the rest of it. So they are not. And yeah, if Kath's right, and this was a database leak of owners' credentials, wallets, contact instructions, then all that's being done by hackers is creating a picture of who you are, how much you might be holding, and on public blockchains in particular, that's a known effect. And so they'll try harder attacking you, whether that's with social engineering or with known cryptographic vulnerabilities in libraries. So your best, or I think my best advice, the best advice around it at the moment is to use hardware wallets if you're going to be holding any significant amount of Bitcoin blockchain tokens. Use them sparingly, and don't stack up too much on particular addresses. And one wallet will have the keys for multiple addresses, so you may want to consider multiple devices as well. If you are holding a significant amount of cryptocurrencies, so we're talking your life's worth, then you need to be considering alternative custodial measures. So you are, if you're a decentralized, self-sovereign maxi like me, then your best bet is to start looking at how you can do multimodal and multi-signature storage of your assets. So this maybe getting a bit too nerdy, but multimodal means you're holding it. You've got multiple people who have to sign a transaction for actually assets to move. So you might form a an agreement, like me, Luca, Eric, we might gang up together and say, okay, we're gonna custody our family's assets on the blockchain. We're all going to use different modes of storage. So I might say, okay, I'm going to use proprietary commodity PC hardware that's had all networking technology removed from it. I'm going to store my signing keys on that machine. It will never connect to the internet. Luca will say, okay, I'm going to use my trusted ledger that I've had no issues with for, since it was constructed. It's not had the firmware updated. It's solid. It's just robust. Eric, you might say, okay, I'm going to use a Keystone wallet from another manufacturer. And then you've got multi-modes, multi-institutions who've put these packages together. You've also got multi-signatures that are required to sign and move these assets. And so then you've suddenly got a much, much larger surface area that the attacker will have to reach you on to be able to form some kind of successful attack. And so that's where you're really looking at self-sovereign, strong custody asset. If you want to go the other route, of course, there are institutions now who will do custody for institutions. So Etana back the entire Kraken asset storage. So they're a commercial company. They have insurance in place. They have really robust cold storage facilities. You've got multi-participants, multimodal, multi-signature, all built in with that commercial organization. And your agreement is with them to store your assets. And they will be doing it in the same method as perhaps you, me, and Luca would be, but they will be doing it for it as a service, and you'll pay them for that service. And so these are really the ways that if we're going to move away from banking infrastructure and start putting our assets into something that's out of the hands of a centralized organization whose interest is in making money from your money, then we can actually custody it on blockchain storage mechanisms with their private keys stored in off-network facilities. And that can be yourself, or it can be from companies like Etana and so on and so forth. So yeah, your crypto founders are working with large custodians to store their treasuries. Charles Hoskinson, I was on a call with Charles Hoskinson just yesterday, and he was saying that at the Cardano's inception, they actually used BitGo as their custodian. So BitGo, you can go and look them up. Large custodial institution, and these are the sorts of guys who will be really looking at as institutions come on board, they'll be taking on over the responsibility of storing these assets. So they'll become the new they're holding the keys to your assets, but it needs multiple people to participate with those assets to make any transaction with those assets, and they have a contract with you to keep them safe. They also will offer insurance services. So it might be that you say, okay, I'm going to pay £20 a month to custody my assets with this institution. If they have a vulnerability, if they have a hack, someone manages to get in and steal their funds, the insurance company will then step up and make you good. So there are all these sorts of grown up big boy mechanisms coming into the space as well. At the moment, you really are pretty safe with self-sovereign hot wallets even, but cold wallets that aren't upgraded a lot, that you're keeping a close eye on, you're not holding too much on, are the next best thing. They're the gold standard. And then you can get really nerdy with other mechanisms as well. But yeah, these are all measures on measures. Inconvenience over convenience over accessibility over pain, and it's all how you weigh it, how you measure it. But yeah.
Thank you very much, Jonathan.
Thank you, Jonathan.
We're coming to the end of the hour. Jonathan, if you want to post in your Cardano hour link, I'll recommend anybody to as soon as we close this one, Jonathan will start his session on Cardano. If you want to see how things are done on a real blockchain, there's no better place for that. But before we close, just one thing to add to what Jonathan was saying is that with all the technical things that you can do to keep your account safe, most hacks happen because you give the hackers access to your funds. So it's, although you can be as prepared as you want, if you do something silly, giving somebody your seed phrase, for example, your coins will be stolen from you. Doesn't matter if you got a Ledger, Trezor, or the most fantastic wallet. That can still happen if you're not careful about what you do with your, with your passwords, with your seed phrases, and how you look after your important information. So make sure that you understand that really well, and that part of it is very clear in your mind of what you should and should never do connected with your crypto assets. So if anybody asks you, just the word, seed phrase, private key, the answer is no. Whatever they ask you, the answer is no. Never, never, ever share it with anybody else. Okay?
Don't follow links as well.
Exactly. Don't click on links, both on emails and text messages, because that's the way that when your account gets compromised, your details get into somewhere, they will send you messages that look real. So you don't click on that. If you think it's relevant, go into the website with the normal way that you log in. Don't just click on the link and be lazy. Just go on to and just log into the website as you normally would, and then see if it is real or not, or if it was just like an attempt to get your funds. Okay, so I wish you all a fantastic weekend, and it's been an interesting session today. And we'll see you again next week, same place, same time.